As of November 2024, natural gas markets show increasing demand driven by industrial growth in Asia, particularly in China and India, alongside a modest rebound in Europe. However, geopolitical tensions, including risks to supply chains in Ukraine and constraints in LNG shipping routes, continue to create price volatility. Natural gas ETFs like BOIL and UNG are benefiting from rising prices as demand outpaces sluggish supply growth, though risks remain high due to fragile market fundamentals. Future supply expansions, particularly in North America, may ease tensions by late 2025. G'day folks, welcome back to another update for natural gas and its ETFs. Before we go any further, make sure you hit that like and subscribe button to support the channel. And for added benefits, go to the end of the video where we can subscribe to the Patreon channel. So here we've got the natural gas commodity price with the monthly, weekly and daily trends. We start with the trends first. So on the monthly, you can see here our CCI is above its moving averages and the price is broken above its respective moving averages as well, so giving us a bullish signal. On the weekly, likewise, both the CCI and the price are above their respective moving averages, showing bullish momentum. And on the daily, also above their respective moving averages. Now, again, the trading strategy is we always trade in the direction of the higher time frame. So if you're trading on the daily, you go in the direction of the weekly trend, or if you're trading on the weekly, in the direction of the monthly trend, etc. So if we drill down on the daily first off, zoom into here, we did have this bearish divergence in our last video. That CCI was high, was below that previous high. Now since then, the CCI and the price has broken through that previous resistance at 31.94. So we're going to move that resistance up to that point there. That's our new resistance level. So we might see a pullback there. And I'm going to delete this Fibonacci retracement and also this divergence. That divergence has now been invalidated. So no longer a divergence in play. So at the moment, and that minor resistance remains there at 30.96. So that's our new key resistance at 34.12. So just be careful about going long. I'd like to see this break through this resistance to be more bullish. But again, we're bullish at the moment on the daily with the CCI and the price moving higher. Now, if we go to the intraday charts, remember if we trade in the higher direction of the higher time frame. So if you're trading on the hourly or any other intraday time, we go in the direction of the daily, which is bullish. So long trades only to be taken. So again, we had different divergence here, and these divergences are independent from each different time frame. So on the hourly, we did have a Fibonacci there. You can see there at a bearish divergence there, broke down, hit our target area, and I marked these targets with little rectangles. We had a smaller range Fibonacci divergence or bearish divergence, and it came down, hit our target range there. And since then, there has been no other divergence, and even at the moment, there's no divergence to be shown. Now notice, you would have taken these long trades where the CCI broke above the moving averages and also the price in accordance with the bullish movement on the daily. So you would have taken these bullish trades. And if for each one of these, you would have, if you're in that trade there, you would have closed out your position now with that CCI breaking into that moving average range. I like to take the close of the position when it breaks in that CCI moving average, as opposed to waiting for it to close in this moving average there. That moving average primarily is a break outside of that, alongside with the CCI to take an entry. And the close position I prefer is when that CCI breaks into that moving average range. So you would have closed your position on that little bearish candle at the top there. So here we have BOIL on the monthly. It's still bearish. The price is below its respective moving averages. There's no CCI for that. On the weekly, we have had this almost for 2 years now, a bullish divergence versus lower lows on the price. And that's giving us quite a confusing signal actually. We don't actually go long or short on that one. And on the daily, we've had a bit more confidence in the divergence, giving us some bullish divergence. You can see there on the bottom, it's a bit hard to read, but lower lows on the price, but higher lows on the CCI. And for each of those, they've bounced ever so slightly. That even those ones there, you would have had a little bounce there if you put in the Fibonacci, for example, from that low to that significant high. That's bounced up and hit, just touched that 23% level. So as an example, that's where the minimum target range is always placed, at that 23-38% Fibonacci range. And more recently, we drew this little smaller range bullish divergence versus lower lows on the price there, hit the target range, and this one's actually gone quite higher there. If I draw a Fibonacci on that range, you can see there it's broken up through the 23-38% and currently resting at the 50% level. And we always track this on the Fibonacci and see how far it's going to go. And the key area is the 61%. If it breaks through that, there's a good chance it's going to keep going further to the upside. So at the moment, bullish movement on the, on the daily. Now if we go to the intraday chart, we take long trades only. Again, similar to the natural gas commodity price, only long trades to have been taken, and you would have closed out that first position on that little candle there, and then re-enter it once it broke above, and you'd still be in the trade on this one going long, and wait for it to break into that moving average range of the CCI. So for KOLD, the inverse is happening. We've got a bullish movement on the monthly. There's no CCI drawn yet on the monthly chart. On the weekly, it was bullish, but it's actually broken down through our moving averages, giving us somewhat of a fresh breakout. Well, actually, it's a neutral position. It hasn't actually broken out of that moving average range yet, but you can see there the price has broken through that moving average range, a very strong bearish candle, and we may see it break to the downside on the weekly CCI as well, giving us bearish momentum. On the daily, you can see there it actually broke through this previous minus support at 61.65, alongside with that bearish movement on the CCI. So bearish trades to be taken on the intraday. And if we go to the intraday 1 hour chart, again bearish trades only to be taken, and you can see there you would have been wise at the end of our last video. You would have taken that short entry there when it broke below the CCI moving average, but also the price moving average, and you would have taken your first close position on that little candle there, and then re-enter it on that bearish candle, and you'd still be in the trade, and in the next hour or two you'd probably close out your position near the bottom there. So for UNG, still bearish on the monthly price chart, and at neutral, a very narrow range of moving averages on the CCI, but neutral positioning on the monthly CCI. On the weekly, we also have a bullish divergence here on the weekly with lower lows on the price, and that still hasn't really had any major breaks to the upside to be more confident about going long on the weekly. On the daily, it's actually been hovering around this support level now for a number of months. It's almost a triple bottom there, you can see there. Had a bit of a retrace there. There was no divergence, and there still is no divergence to talk of on the daily. But at the moment, you'll notice we're still above its moving average of the CCI, and also above the price. So bullish movement on the daily if you're trading on the intraday time frame. Now, if you go to the 1 hour chart, again bullish movements only as per the daily chart. You would have taken a long entry there at the end of our last video. When it broke above the CCI and the price moving averages, you would have closed out your first position on that candle there, re-enter it on that candle when they both broke above the CCI moving average, and you'd still be in a trade. And again, and similar to the other charts, you wait for the next hour or two to close it when it hits that moving average range of the CCI on the 1 hour chart. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.